Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains. And today we're taking a look at two nuclear energy stocks to consider buying now and holding for the long term. And those two stocks are Constellation Energy, which trades on the ticker CEG, and Cameco, which trades on the ticker CCJ. But before we get into everything, remember to subscribe and leave a review wherever you listen to your podcast, and make sure to check out our Zacks.com/promo page before we look into some of our services, portfolios, and more. So we saw NuScale Power and Oklo soar over 200% since early April, and we saw some massive moves in those two stocks on Wednesday. I'm recording this on Thursday afternoon, as Wall Street kind of dove back into all things risk again, looking towards long-term upside. And then obviously with those two pretty speculative stocks, you might want to consider those. There could be a pullback at some point soon. So we're put those two stocks definitely on your radar. But Oklo is completely pre-revenue and NuScale is essentially pre-revenue as well. So they're totally on the speculative side at this point. So that's why we're looking at Constellation and Cameco, because they're about as established as it gets in the broader nuclear energy industry. So before we get into those two stocks, I just want to do the quick, broader bull case for nuclear power. So the U.S. government, Wall Street, and big tech have thrown their collective weight behind nuclear energy again, and the expansion to support the power-hungry artificial intelligence revolution, economic growth, while at the same time slowly trying to wean off of fossil fuels. And this is kind of like a long-term play. So the U.S. government has launched various initiatives to support the revival of nuclear energy, aiming to triple capacity by 2050. More recently, President Trump signed an executive order in late May to accelerate the expansion and innovation of nuclear power in the United States. On top of that, Meta and Amazon have made high-profile deals with nuclear energy companies in the last few weeks as part of a wave of long-term power agreements by AI hyperscalers with nuclear power companies. Meta made a deal with Constellation, who we're actually talking about today. Microsoft has made a deal with Constellation as well. And all of these companies have once kind of reaffirmed their commitments to AI-focused CapEx spending, despite kind of those initial fears at the start of 2025 that the spending was going to slow down. And this is all coming on the back that generative AI platforms like ChatGPT use at least 10 times the energy of a typical Google search. So they're going to be using more energy than ever before. Large data centers can consume nearly as much electricity as a mid-sized city. So this is kind of the push behind all of this. So the AI-driven energy boom is arriving just as the US and major tech companies try to reduce their reliance on fossil fuels. So that's why there's the big push to get all in on nuclear energy again. Big companies, specifically Amazon, Microsoft, Alphabet, Meta, those companies alone are projected to spend roughly $325 billion on AI capital expenditures in just 2025. So this is the backdrop of why we could see up to $2.5 trillion spent on clean energy technologies and infrastructure in 2025 alone. This is globally. So this is the kind of the bull case for all of this, and critical players across government, finance, tech, heavy industry, and beyond are finally recognizing kind of the need to dive back into nuclear energy, which has been a constant baseload power for the U.S. for a really long time. And in terms of capacity factor, nuclear power plants operated at full capacity at 93% of the time, making them the most reliable energy source in the United States. And this is according to the U.S. Energy Department. So that's above geothermal, above natural gas, and way above wind and solar, which are around 35% for wind and 25% for solar. So this is the big push behind broader nuclear energy, and why we're going to take a look at Constellation and then Cameco after that. So Constellation, which once again trades the ticker CEG, signed a 20-year nuclear power deal with Meta, so the company behind Facebook, on June 3rd. The power purchase agreement solidifies the long-term symbiotic growth relationship between nuclear energy and artificial intelligence, entrenching Constellation as one of the best long-term winners on Wall Street. Despite the blockbuster deal that it announced earlier this month, in Meta's big AI data center push with that 20-year power purchase agreement, the stock gave up all its initial gains. So I think it jumped up roughly 12% pre-market around there. This was earlier this month, but it got rejected at its all-time high. So it was kind of growing overheated at the moment. That said, patient longer-term investors and traders now have a chance to buy Constellation down roughly 14% from its highs, or possibly wait for a larger pullback to some of its key moving averages. So we'll look at that in a minute. But now we're going to jump into the broader case for Constellation Energy. So it is currently the largest nuclear power plant operator in the United States, managing over 20 reactors across roughly a dozen sites in the Midwest, Mid-Atlantic, and Northeast. It then strengthened its bull case back in September of 2024 when it signed that big, at this point now kind of blockbuster deal that cemented the relationship between AI and nuclear energy with Microsoft. So a 20-year power purchase agreement that will see it restart Three Mile Island Unit 1. The biggest U.S. nuclear power company then cemented its position as kind of a modern energy titan with a planned $27 billion deal to acquire natural gas and geothermal powerhouse Calpine at the start of 2025. The acquisition is going to create the largest clean energy firm and expand its footprint into power-hungry and tech-heavy Texas and California. So along with nuclear energy, natural gas is going to continue to play a massive role, especially in the near term, since they're a little bit easier to roll out, especially after kind of years and years and decades of stagnation on the nuclear energy front. So Constellation gives the best of both worlds, that huge exposure to long-term nuclear power growth, and then also the continued expansion of natural gas as well. And then most recently, it signed a 20-year power purchase agreement with Meta for power in Illinois. It's set to start in 2027 as Meta tries to expand its AI data center footprint in Illinois. So the agreement will also see it possibly pursue building small modular nuclear reactors, so SMRs, at its Illinois site. In the deal, which is kind of critical for these big companies, is it's going to allow it, and what happened with Microsoft as well, is these big, huge tech companies that have all this cash are able to help support these older nuclear reactors that are really costly to run. Without these big deals, we might not have kind of the near-term ability for these companies to sustain this growth while looking ahead to these, what are supposed to be more efficient and less costly small modular reactors, say 10, 20 years down the line. So in the meantime, Constellation raised its dividend by 10% in 2025 after it boosted its payout by 25% last year. It also is projecting visible double-digit long-term earnings per share growth backed by the nuclear production tax credit. The company also expects to grow its adjusted earnings by 9% in 2025 and 22% in 2026. And in terms of kind of how the stock has performed and some entry points to possibly get into, if you're a short-term trader or a longer-term investor, the stock is up 440% in the last 3 years, blowing away the energy sector's 2% gain and the S&P 500, which is up 60%. This is part of a roughly 470% run since its early 2022 IPO after a spinoff, as investors race to get into the stock for its earnings growth, its dividend, and the long-term upside potential of one of the biggest nuclear power companies in the US and the world. It's been a little bit more up and down over the last 12 months, but it's still up 36%. And as I mentioned up top, it did get rejected right at its all-time highs after that post-Meta deal, spiking in the early morning, and then, as I said, getting firmly rejected there. So it's now trading roughly 14% below its all-time highs. It's trying, as I record this, it's up around 3% midday Thursday, trying to hold its ground at its 21-day moving average. Some investors might want to wait for, say, a larger pullback to its 50-day. But if you're a long-term investor and you don't want to try to get into the weeds of timing things exactly, you buy it now, and then if it falls, say, to its 50-day or 200-day moving average, buy a little bit more. And if you're thinking 5, 10, 25 years from now, getting in at, say, a slightly lower price is not going to make that much of a difference. That said, if you're a trader, you might possibly want to wait till it slides to its back toward the January breakout levels and its October highs, which we're edging towards now. And in the end, overall, traders and longer-term investors might want to put Constellation on your radar, especially as you see these more speculative nuclear energy stocks go nuts. Those could certainly face near-term pullbacks, and Constellation looks like it is ready to eventually break out to new all-time highs, even if it doesn't do that in the next couple weeks. If you're a longer-term investor, certainly put it on your radar here at the moment as it's trading 14% below its all-time highs. And now we're going to transition to Cameco, which trades in the ticker CCJ. It is a Canadian uranium miner and leading supplier of uranium refining, conversion, and fuel manufacturing services. It's the second largest uranium producer in the world, according to the World Nuclear Association. It boasts two of the highest grade mines on the planet in Saskatchewan, Canada. Cameco is also the only large-scale uranium miner that most regular U.S. retail investors can buy. Its importance to the U.S. in the Western world is only going to grow as the U.S. attempts to cut itself off from Russia and the region, which dominates the uranium market at the moment, or at least onshore more of the production. Kazakhstan currently produces 43% of the world's uranium. For comparison, OPEC member countries produce about 40% of the world's crude oil. So that's how important that region is to uranium at the moment, which places even more of a key role on Cameco having a relationship with the United States just north of the border. The U.S. uranium mine industry went nearly dormant until the U.S. government's recent pivot on nuclear energy, but restarting it will take a long time, so it won't happen overnight, which is kind of making the case for Cameco as a both near-term and long-term buy. Its CEO made the bull case relatively straightforwardly in a recent press release. We are continuing to see, this is a quote, continue to see positive shift in government, industry, and public support for nuclear energy, further supported by recent announcements between utilities, reactor developers, and industrial energy users. With our assets and investments across fuel and reactor life cycles, we are uniquely positioned to benefit from those tailwinds as responsible commercial suppliers with multiple long-lived Tier 1 assets in reliable jurisdictions. So looking ahead, we're calling for 11% revenue growth for Cameco in 2025 and then 2% growth next year. And on the bottom line, we're calling for a whopping 127% adjusted earnings growth this year, and then 54% growth next year. And some of these bottom line revisions or bottom line estimates will fluctuate. That has to do with the price of uranium, but the overall bull case is just, are they continuing to see growth, and are they going to be able to ramp up production to support all of this nuclear energy revival in the US and beyond? And on the dividend front, it said it expects to at least double last year's dividend of 12 cents per share at some point to 24 cents per share of the fiscal periods 2024 through 2026. And then in terms of stock price, it soared finally to all-time highs earlier this week. So on Monday, I'm recording this on Thursday, as I said, it jumped 11% on Monday after it said it would get a major boost from its stake in Westinghouse Electric. The company owns 49% of Westinghouse, while Brookfield Renewable Partners owns the other 51%. So Cameco said it expects this $170 million increase to its 49% share in Westinghouse Electric's 2025 Q2 and annual adjusted EBITDA, driven by its role in building 2 nuclear reactors in the Czech Republic. So it broke out meaningfully above its previous all-time high. So that was a big win for CCJ stock to start the week. And in similar news, this is kind of adding to the broader bull case, since we haven't really touched on its ownership of Westinghouse owning 49% of the company. The Financial Times ran a story earlier this week that noted that Westinghouse's effort to target $75 billion U.S. nuclear energy expansion after the Trump executive order. So this is kind of just a little bit of a rehash of that article. Westinghouse is in talks with U.S. officials and industry partners about developing 10 large-scale nuclear energy reactors to meet the goals of President Trump's executive order, which aims to unleash an American atomic energy renaissance. The Pennsylvania-based company, nuclear energy developer, so that's Westinghouse, is one of a handful of Western companies capable of designing and building these large-scale reactors. So that's puts it in a really great position. The orders, which were published on May 23rd, set targets of quadrupling nuclear energy capacity in the U.S. by 2020 or 2050, starting work on 10 large-scale reactors by 2030, and accelerating regulatory approvals. Westinghouse This is right from the article. Westinghouse, which is jointly owned by private equity group Brookfield and uranium miner Cameco, has enjoyed success with its AP1000 reactors, a pressurized water reactor operating at several locations in the U.S. and China. It's also, this is kind of the key point, Westinghouse faces limited competition in the U.S. market as global industry leaders, including Russia's Rosatom and China General Nuclear Power Group, are unlikely to win any contracts, obviously, here in the United States for obvious reasons. So Cameco's ownership of Westinghouse is another significant boost to its long-term bull case, along with, obviously, its standing as one of the preeminent powers in uranium mining. Overall, the stock's up around 30% in the last year, and as I said, it broke out to meaningfully above its all-time highs at the start of the week. It's now up roughly 560% over the last 5 years to crush the S&P 500, which is up around 100%. So it finally broke above its previous peaks, which it had kind of stalled out recently. So it's trading at a brand new all-time highs. And this is meaningful because it had kind of struggled to break above its previous records from that kind of pre-financial crisis highs back in 2006 and 2007. So now it's in a new trading range, and obviously it could face some near-term selling pressure, but it's good to see the stock totally break out, and it could be kind of now ready to trade in a new range going forward. And it's worth noting that 13 of the 15 brokerage recommendations that we have for CCJ stock are coming in at strong buys. And with its strong earnings growth outlook, despite the fact that it's now trading at new all-time highs, if you factor in that earnings growth outlook, its PEG ratio is sitting at 0.88, which is kind of where it's a median over the last 20 years. And it's only a slight premium to its basic materials market, despite the company crushing it over the long haul. So certainly worth putting Cameco and Constellation Energy on your radar as a long-term buy and hold for the nuclear energy revival in the U.S. and around the world. So that does it for this episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.